Let's get more on today's slide in the markets. Let's bring in Jim Bianco, the president of Bianco Research. Jim, great to have you with us.
Hey, it's Guy. Sorry.
And I will start with the point that Tim was making, and that is the action in the Treasury market. What are yields telling us right now?
You know, I think that there's a concern that I have that yields can't fall. The Fed has bought $3.5 trillion worth of bonds since March. We've been trending sideways since March right now. The Fed has been crowing that they've been suppressing interest rates. Okay, so they're telling us that rates would go higher if they weren't there, yet they're still creeping up. I think that the path to least resistance for rates is higher. I think that if you wanted to attach a story to it, I think there's a concern that all the stimulus talk, I know today's a deal off day, but if we get a deal, we could be looking at inflation returning in 2021. Not a lot of inflation, but let's remind you, everybody, that if we get core inflation to 2.5%, core PCE to 2.5%, that's a 27-year high. That's all you really need to start getting the market worried about inflation. There's reasons rates go up and down. And a lot of people think that rates go up because the economy is getting better. They can also go up because you have inflation, and that would be very problematic for the stock market and all risk markets if it is a bit of inflation fear.
Hey, Jim, it's Tim. Thanks for joining us. Vice Chair Clarida was out there on the tape today throwing a lot of cold water on the market, but patting the Fed on the back in terms of their easy policy provided better economic stimulus than people had thought. Why is the Fed so vocal right now and as it relates to politics and obviously pushing hard for fiscal? But again, these kind of comments to me are bizarre, if nothing else. And I think we don't really know where Fed policy is going, even though we know what it's been over the last 3 years.
You know, I think they know what they want Fed policy to be. They want it to be no rate hike for 3 years. They want everybody to think that the stock market is up and it has nothing to do with the Fed, that there is no stimulus push from monetary policy to push the market higher. I think what their fear is it's somewhat out of their control. Yeah, they can be sincere. They don't want rates to go up for the next 3 years. But if a set of circumstances, inflation or something else, manifests itself in 21, they're going to have to change course. It may not be obvious now. So I think that they're kind of concerned that things are a little out of their control, that they're like the rest of us. They're just guessing about the future where we think that they have a hand in controlling the future, and they're hoping that their guesses are right.
Hey, Jim, so you said, you know, inflation had a 37-year high or whatever, but people have been talking about higher inflation for some time. So what makes you think that one more fiscal stimulus bill, whether it's a skinny bill now and then an administration going forward for the next few years that is hell-bent on infrastructure spending, that sort of thing, is really going to cause the sort of inflation that we've thought that might happen with zero interest rates, but never has happened?
That's a good question. Let's start with the deficit. It's 16% of GDP. There's only been a handful of years in American history that it's been bigger than that. The last time was World War II, 1 year after the Great Depression, and that's it. That's a lot of pump priming that you've seen from the fiscal side with the promise of more coming. Supply side, the economy is smaller now than a year ago. We are producing less gross domestic product or less stuff than a year ago. Less supply keeps stimulating demand. It should show up in higher prices. Look, if it doesn't, then we can go full in on trillions of dollars of more stimulus next year and trillions of dollars more the year after that. I think ultimately we're just going to keep going down this road until we get inflation. I think it's going to come sooner. That is next year. I don't think you're going to see it this year, but when you get past 1 year past the lockdowns, I think it's going to show up. And that's why I think you've got record budget deficits and you've got a big contraction in the economy. That should produce higher prices.
Jim, great to see you. Thanks for your time.
Thank you.
Jim Bianco, Bianco Research. James.